And I'm going to talk a little bit about a product that I've talked about before. And that is the 5-1, I should say the FHA 5-1 ARM. And I'm going to pose the question again, is this the best ARM program available? And I'm going to say yes, and I'm going to show you some proof. So what I decided to do is I got on the MLS system here locally and looked at some listings in the high 400 range. And I found one, an active listing, a single family home, 3-bedroom, 2-bath in La Quinta, just down valley from here, as we call it. And it's listed for $479,000. It's been on the market for a better part of a month. No adjustment in the price so far. And so one thing I would point out, here's an example of, at least in this market here in the Coachella Valley, there are single family homes available, at this level. So it's not like you have to think that for something at that price level, it has to be a condo. No, there's some decent single family homes available in this valley. And so this is a good example of one that's currently active for sale. And so part of my message here would be for anyone who's maybe a first-time home buyer, or you're an agent working with a first-time home buyer. What I'm going to show you here is a good example of what's real, what's doable, what's possible today to provide you some very good terms in getting a property like this financed. So again, there's the active listing, La Quinta 479. So let's assume you're going to make a run at this property. You think you can get a concession, but you end up talking to me. I talk you out of taking that concession off the price, and I suggest you offer $479 and you ask for a $15,000 seller credit. So again, as Jeff just pulled up, there you have it. Negotiate a $15,000 seller credit. Now, with an FHA loan, what's the down payment amount? It's 3.5% of the purchase price, $16,765. So again, what we have now so far is you're making an offer at $479. You're asking for a $15,000 seller credit. You successfully negotiate that, and your minimum down payment is only $16,765. Now, what would you do with that $15,000 seller credit? Well, I would recommend that you do a permanent rate buy down on that 5-1 ARM. Right now, the 5-1 ARM with no points is in the upper fours, like 4 3/4 or so, 4 3/4, 4 7/8. Well, with a $15,000 seller credit, you can then take that credit amount and apply it to the points that would be required to bring that rate down to 3 7/8. So those of you waiting for 2s and 3s, here's an example. You can at least break through 4 and get to the high 3s with this strategy. And by the way, I say permanent rate buy down because with the FHA ARM, you cannot do a temporary 2-1 or 3-2-1. That's not allowed. So you would do that $15,000 credit would pay for the points to get the rate down to 3 7/8. What does that do with your minimum down payment on that price as to the monthly payment? Well, get this, principal and interest, $2,212. I don't know about you, 3-bedroom, 2-bath home on a standard size lot. I think this property was around 1,600 square feet. $2,212. Now, granted, that doesn't include your property taxes, doesn't include your homeowner's insurance, but still, $2,212. I would argue that's very competitive to what rents are. I mean, how many stories have you heard about somebody renting a modest 2-bedroom apartment that's costing them $2,500 a month? Well, there you have it. Now, of course, yes, you add taxes and insurance, you're going to get up closer to $3,000. But again, you're buying nearly a $500,000 home with a minimal $16,765 down payment, and you're getting 3 7/8%. Now, what does this ARM do? How is it structured? Well, you're going to have that initial rate, and therefore the corresponding $2,212 payment. That's fixed for 5 years. No changes. It's fixed for 5 years. Then what happens is the loan adjusts annually every 12 months after that. So then you say, okay, so what are the caps? Well, in the first adjustment in year 6, 1%. So now I didn't mention, ARM loans are going to have an index with a margin added to it. With the FHA loan, it's a 1-year CMT, constant maturity treasury index. Right now it's around 3.6. And then a margin is added to that, 2.25. So you add those together and voila, you're talking about high fives. So let's assume after 5 years, the loan's adjusting and the index plus margin calls for a 5 7/8 rate. Well, you have a 1% cap. So despite that index plus margin in year 6, you're going to only go up by 1% to 4 7/8. You're not going to go to that 5 7/8 because you have the 1% cap. That cap stays in place annually every year for the remaining 25 years. So it's 1% at the first adjustment, 1% each subsequent adjustment. Over the life of the loan, 5% life cap. So on a 3 7/8 bought down rate, when you got that seller credit, you're going to have a life cap of 8 7/8, single digit life cap. That gives you lots of protection in a rising interest rate environment, which of course it would have to be a sustained rising interest rate environment to ever get to that life cap. But nonetheless, at least you are rest assured that you have a single digit, pretty low level life cap to guard you against the worst case scenarios. And here's the kicker. The FHA ARM loan, unlike virtually any other adjustable rate mortgage product out there today, at least as it relates to a 5-year term, qualifies at the start rate. This can be very important. If you're having trouble qualifying even at this price level based on debt ratio, this can help you qualify, give you more purchasing power. The standard 30-year fixed FHA, as we showed on our rate grid, is right now it's back to about 5 3/8%. Being able to qualify at 3 7/8 means your debt ratio is going to be calculated on a much lower monthly payment. That's going to help you reach that debt to income ratio limit that you have to meet. So this can be an extremely good qualifying tool for those of you who are a little bit stretched on meeting the debt ratio requirements. So again, as a first-time home buyer, this is really good for you to know. If you're working with if you're an agent working with a first-time home buyer, you're running into some trouble in terms of getting pre-qualified because debt ratio is an issue, the 5/1 ARM can be a great alternative. Now you might say, oh wait, it's only fixed for 5 years. A lot of risk there, right? Yes and no. If you're able to pull this off and you start at 3 7/8 for 5 years, you know that worst case in year 6 is 4 7/8. Worst case in year 7 is 5 7/8. You've got 7 years at that point where your rate's going to be between 3 7/8 and the current level of rates in general, about 5 7/8. That's an awfully long time to give you the opportunity to do what? Refinance into a 30-year fixed, a longer term loan that's fixed for the entire term when the opportunity presents itself. Or alternatively, within that 5 to 7 year period, you might decide if it's a starter home, time to sell it, cash in your proceeds, and then look to move up to a higher home. So this is a great tool for those of you who are very interest rate sensitive and maybe a little bit tight on qualifying based on debt ratio. This is a great alternative that I want you to know about. And of course, it's available only for primary residence homes. It's not for second homes. It's not for rental property. And important to understand, you do not have to be a first-time home buyer. A lot of folks think that. FHA does not require you to be a first-time home buyer. A lot of first-time home buyers use the program because of the overall more lenient qualifying guidelines, the 3.5% down payment minimum. But despite all that, you can be a repeat buyer and use this program to buy a home. So again, if you're interested in this, be happy to give you some numbers. I can ask you a few questions, get an idea what your scenario is, and then I can put together a worksheet and get that sent off to you so that we can talk about all the numbers in detail to make sure you're comfortable. My office line there is right there on the screen. So give me a call. Let's have a conversation. Let me show you some numbers and help you get into home ownership using what, again, I call the best adjustable rate mortgage program on the market today. That's the FHA 5/1 ARM.